Hello everyone, this is Professor Kent. This recording is for pension, and we're completing a worksheet for IFRS. This question, it has both the remeasurement gain and loss on plan assets and actuarial gain and loss. So this question is a good question to get to know the topic overall. Again, we're going to complete a worksheet, and it is an IFRS. The reason it's an IFRS, the company is a publicly traded company. The company sponsors a defined benefit pension plan. So the company has a defined benefit plan, and we're trying to calculate it for the year 2023. So again, we're going to go through each one, get the information, and then from there include it into the worksheet and do the journal entries, and from there learn if the fund was overfunded, or pension plan was overfunded or underfunded. So the first part is the actuary has determined the actuarial present value of future benefits earned by the employees for the services rendered in the year. So the services they provided us for the current year, and that is for $86,000. So we call it current service cost. So they worked for the company, so the company owes them the benefits. So that's the current year services. So that will be my current service cost. Then going to the next point is that the plan requires to make a cash contribution. So the contribution to the plan is $175,000. So that is my contribution. So when you're reading the question, try to highlight what the amount represent. On January 1st, that's the beginning balance. The company's defined benefit obligation was 103. So that is what we are starting with, the first number, $1,030,000, and that is my obligation. If the obligation, that is a credit, and the fair value of your plan asset is 950,000. So that's the balance is 950,000. It's an asset, that will be a debit. So then we needed to know, do we have a balance in our opening balance in net defined benefits? Yes, we do, because we have a credit and we have a debit. Difference between the both will give you your net defined benefit liability slash assets, and difference between the both is $80,000. My credits are higher, so this balance will be a credit balance. Then they said the plan asset generated a return, and that is called an actual return. So we have an actual return on the plan asset, which is 56,000, and we also have a discount rate. This discount rate applied to both your obligation and to the plan assets. Benefit, this is the benefit that is paid, is 75,000. And then they said in late December 2023, the actuarial revaluation of the obligation. So there is an obligation and it's an actuarial revaluation, and there is a loss of 29,000. So we have an actuarial loss, or you could have an actuarial gain, just like the way we have remeasurement gain or remeasurement loss. So in this case, we don't have any past service cost. If we don't have any past service cost, we don't have any expense, but we do have a current service cost, and that was my 86,000, and that's what we have taken care of, and that will increase my pension expense. That will be 86,000, and this will increase my expense. My liability went up. Going further, what we have is we already dealt with the beginning and endings. Now we're making a contribution. So the contribution to the plan was 175,000 that is given to us. I'm just going to make it here 175,000, and that is a contribution, that's a plus, and it's coming out of my cash account, and that is my 175,000. That is my 170,000, and that is my credit. Now we're looking at my net interest and finance cost. To do that, first we needed to look at what my expected return is. So my expected return will be on your planned assets. So we have a balance of 950,000 and the discount rate is 8%. If I multiply by the 8%, I will get 76,000, and that is my expected return is 76,000. That will increase my plan asset. That's a return. And they also told us in the question and that we have an actual return. My actual return is $56,000. So we expected to generate 76,000, but we only generated return of uh, uh, 56,000. So the difference between the both is 20,000, and that is my remeasurement loss. In this case, this is a loss. If this is a loss, it will be a credit, and it will be a credit of $20,000. So that's, we know that if it's a I put it on the benefit paid. It will be on the remeasurement gain and loss. That will be my $20,000, and that is my credit. Since we are doing a IFRS, and I will have a debit of 40,000. That's my loss. Again, if it's a loss, it's an expense. If it's a gain, it will be like treated like a revenue, so it'll be a minus. So we dealt with that. They said the benefit that we paid was 75,000. That will reduce your obligation. That will be, and also reduce your asset. So then we have done that. Now we also have interest on my obligation. So let's work out the interest, and then we are almost done with the filling the the worksheet. So my obligation, I started off with 103,000 multiplied by the 8%, and that will give me $86,000. So that no, sorry, 82,400. I have put it in the wrong number. 82,400, and that is my interest. If it's an interest, will increase my liability, and if it increases my liability, it also increases my asset. So this is my interest cost, and then we have an expected return, and our expected return is $76,000. So the difference between the both, what we have is we have a difference of 6,400. So this will, in you have a difference between the interest and the finance cost. Your return is lower, and your expense, this is my expense, your expenses are higher. So this will be your credit. In this case, it will be your credits are higher. If credits are higher, it will increase my expense by 6,400. So that would be increased. Now they also told us in the question we have an actuarial, and that is a loss of 29,000. Now the other thing I wanted to tell you, that if in the question they give you an ending balance and we're just missing the actuarial gain and loss, you can add and subtract the number and find out your actuarial gain and loss. If it's not given, they will give you the ending balance in your in your obligation, or they'll give you an actuarial gain and loss. If they don't give you ending balance, that means we treat that it will be nothing. In this case, it is a loss. And how much is the loss? The loss is 29,000. And if it's a loss, it will be a credit here this side, and what we're going to do it in the other side, it will be my debit. Again, because the company is following an IFRS standard, that's why it is going under the remeasurement gain and loss. If it wasn't following that, everything will sit under the pension expense, because ASP companies do not have a remeasurement gain or loss OCI. So now once we have done everything that we needed to do, our next step is to do the entry. So if I add everything in my remeasurement gain and loss, I will get a debit of 49,000. So what if there was one debit, one credit, you have to subtract it from each other. Then what we have is we add the expenses. We only have two, and that is the 92,400, and that is my debit. If I debit these two, I will the same amount I have to credit the net defined benefit liability slash assets. So in this case, if I add both numbers, I will get 141,400, and that is my credit. My contribution 70,000, 175,000, this was credit, and it will debit the 75,000 here. Now what we needed to do is we needed to do an ending balance. So again, you add and subtract everything in here and then do a total. So I add and subtract in both under the assets and under the obligation. If I add up all the numbers, my balance will be 1,106,000, and that is my debit. I also add and subtract. Again, we have one debit, but everything else is a credit. So you add up all the credits, then minus the debit amount. We will get a balance of 1,152 and $400, and that is my credit. Now difference between those two will be the balance that will be in here. That will be 46,400 and a credit. Again, when you're doing it, you have to add up everything. So if I were to show you this, we started off with 80,000, and that was a credit balance, and I added the expense entry, and that's a credit, and my contribution, that is my debit. So then I will add up these two numbers and subtract it from 175,000. I should get a number of 46,400. So the difference between these two will also be 46,400, and it would be a credit because the credit balance is higher. So now the next part of the question is asking us to do is asking could be asking you to do journal, not could be, we needed to do a journal entry. So it is an IFRS company, so we are going to do our first entry. Debit will be your pension expense. Even though you did a worksheet, you still have to do the journal entry. My pension expense here will be 92,400. We have a remeasurement gain and loss. You could have, only going to do one entry. We combine the entries. So in this case, it will be remeasurement gain and loss. A remeasurement gain slash loss. If it's a debit, it's a loss. If this account is a credit, it will be a gain of 49,000. And we credit net defined benefit asset slash liability, and that is, if I add both numbers, it will be 141,400. My second entry is for the contribution. When you make a contribution, we debit the net defined benefit asset slash liability, and that is for the contribution 175,000, and we make a payment of cash 175,000. So that will be the transaction. Then the next question we could ask, is this overfunded or underfunded? Our liabilities are more and my assets are less, we call it underfunded. This plan is underfunded, and how much is the underfunded by? 46,400. So that's what it is, underfunded, or we could also say it's a deficit. Now this is, if this question can be easily transferred as easily changed to an ASPE. If it was an ASPE, I'm not going to do anything. Everything else is exactly the same. Now the only thing is going to change is we don't, under the ASPE, if this question was asked you to do under the ASPE, how this question changes, the thing you have to do, how it's going to change is, I'm going to just change the ink of it so that I can show you how it is changed. So we are going to change into blue. So we had this, if we don't have a remeasurement gain and loss, if the company was following an ASPE standard, then what you're going to do is your 20,000 debit will go under my pension, your 29,000 of your actuarial loss will go to your pensions, to pension expense. So you're not going to have anything under the pension expense. So when you total up all your pension expense, the balance will be 141,400. So how is this going to change my entry? So how is it going to change my entry? I'm not going to have any remeasurement gain and loss. The only thing is going to change is then we will have a pension expense. The pension expense will be 141,000. Nothing else has changed. So then this question becomes an ASPE question, and instead of an IFRS, instead of a public company, it becomes a private company. Nothing else has changed. The only thing is your remeasurement gain and loss and actuarial gain and loss, it will sit under the annual pension expense instead of the remeasurement gain and loss on OCI. I hope this question will help. This question gives you the overview of chapter 19. We did this question following an ASPE and following an IFRS. So, and this question also has both the remeasurement gain and loss and the actuarial gain and loss. Again, this is the overview of chapter 19. Let me know if there's anything else you want me to record. Thank you so much for watching. Please give me the feedback underneath the video to see if you have any questions. Thank you so much again. Take care and bye for now.